Traders, welcome back to another price action trading lesson. And in this video, we're going to talk about how to use price action rules during a high volatile market that is affected by the news and conditions in the world, making the price action very volatile. Today's market was extremely volatile, and more importantly, the bars were really big. And when you're trading a market like this, you need to pay attention to the size of the bars, because you want to make sure you're going to scale down the number of contracts you're trading. Because what can happen, you can take just a couple of losing trades, but because of the bars are so big, you can wipe out all the winning trades from the earlier sessions you had last week or last 2 weeks. So you have to make sure you're going to scale down the number of contracts. Also, you have to increase your target profit naturally because the stop loss is much bigger. What you can also do is just sit on the sidelines or maybe sim trade it or just watch the market until the volatility subsides or the bars are a little bit smaller, because most likely you don't have that enough experience trading the market that is fast or that the bars are really big. So definitely nothing wrong with just watching the price action and just marking the trades and eventually trading live once the bars are a little bit smaller, because today it doesn't seem like that, but even the smaller bars are like 6-7 points. So it can get really risky when you're trading before the regular US stock market opens. So this was the pre-market structure, which was a very textbook when it comes to price action rules. As you can see, we started somewhat of a range, but we quickly transform into a bearish structure. And as you can see, the market likes to move in pairs of twos. That's how price action likes to develop. You have first leg, correction, second leg. And as I see this bearish push trending to the downside, I can use the price action tool that's going to help me identify the target. I can measure the first leg. And since I know that the price action likes to move in pairs of twos, I can project where the target for prices may be, and notice perfect measured move. For price action, we reach the measured move almost to the tick, and this is the larger two-legged push. So now that I know that the prices are trending to the downside, the structure is overwhelmingly bearish, I'm looking for high probability setups to sell. The best high probability setup is going to form at the key entry point in the form of a two-legged pullback. And notice our first second entry short is forming at the EMA, while this downtrend according to trendline rule needs to get new extreme. However, the second entry short here is still inside of the bullish channel, which I cannot really sell just yet. Notice, close outside, attempt by the bulls to retest new high, and great lower high confirmation setup form. Lower high is a confirmation setup. When something is wrong with the second entry, meaning, for example, we have uptrend in play, we can skip this and wait for lower high confirmation setup, which nicely formed right at the EMA lower high. And shortly after, we had a failed second entry long and also triple test right at the EMA. Great high probability setup. Why? Because we expect the second leg measured move to be reached. This downtrend is new low, EMA keeps rejecting, and we have triple test and a bunch of high probability setups. So textbook price action, market created push down. And notice, at first I drew this tight channel, but you don't necessarily want to draw a channel that is only tight like this. You want to expect stronger correction. Why? Well, because the two-legged pullback measured move was reached. A lot of sellers are going to be taking profits. Buyers are going to be picking bottom. So after the larger two-legged push is reached, and on high time frames you can see clear two legs down, you need to expect stronger correction. Even though we had second entry short that ended up working for a scalp easily, you necessarily don't want to be taking this. You're expecting a stronger bullish correction. As you can see, the correction is forming, break, new extreme, and at this point, I'm no longer looking for prices to continue higher, because trendline rule played out with the break new extreme. Overwhelming the bias is bearish, and I'm looking for high probability setups to sell again. Counter reset, first entry long, pullback, second entry long, failure. And notice, great tier 1 signal bar, uptrend played out with the break new high indicating bullish momentum is over. Great tier 1 signal bar right at the EMA. Of course, the bar was really big, so this is only marked from price action perspective because, you know, the risk here was really gigantic, but this is a great failed second entry long. And shortly after, noticed new low, first entry short, second entry short, the two-legged pullback, second entry short. I actually took this setup myself. The bar was small for a change. You're close enough to EMA, decent signal bar, and the downtrend needs new extreme. I'm going to zoom back and notice we have over 100 points worth of a down move, which generally always has a trend line, a channel, but this channel was not confirmed. We only have 2 swings, but we don't have third swing confirmation. And since you have larger two-legged push, you have to be a little bit careful, but you don't want to be looking for reversal too quickly. This is overwhelmingly bearish bias. So for this reason, I'm still looking to sell. And notice, you can see after the second entry short, we stalled, we entered a congestion. Prices have no clear direction. You can see small support forming, so we don't want to be selling directly into lows. This is a no trade zone. The way we trade congestions, just like any other trading range, because congestion is basically a smaller version of a trading range, you want to fade the breakout, which we have. The breakout most likely going to fail, but the signal bar is bullish and the bearish bar was too big at this point. We also had additional way how to enter the congestion, which is a breakout pullback. You broke to the downside with the direction of trend and you have a low high, but the bar was really big and you're selling quite low. It's better to be patient, and you can already start to analyze this structure and notice how each bearish push is smaller and smaller. Support is being formed and you're forming a wedge pattern. And you can see wedge pattern is indicating that this bearish trend is losing steam. So you want to avoid selling right in the heart of the wedge. This was quite unexpected. The market reversed strongly to the upside. And even though the overwhelming bias was bearish, this was such a strong spike. I'm following the trend line rule even for this bullish trend. And at this point, the bullish trend is breaking and we expect for prices to create new extreme. This was a strong move down, so the correction definitely may be longer. Remember, the stronger the trend is, the deeper the correction is going to be. We're breaking the channel. We have multiple matching highs. At this point, the shortened bias remains bullish. New high, first entry long, pull back, second entry long. Great second entry long. I tried to take this trade myself, but I had my limit order a little bit deep and didn't get filled. This also happened very fast. You're not fully at the EMA, but since this bullish spike never touched EMA on the way up prior to break, you're definitely most likely going to create new extreme according to the trend line rule. And it's a decent second entry long because a lot of sellers are going to get trapped. And this is where the structure basically ended when it comes to easy setups. And it got really choppy and really confusing after that. So let's go through the price action because we have a break new high. You don't want to be looking to sell just yet because this momentum was too strong. We pushed so far up. We never really broke below EMA for a long time. There is not even a good setup anyway because you already have a break new low. But you can see EMA in one of these bars and you're just starting to go sideways. We have a break new high, so we can't go long, but we can't really sell at the same time. Then we had additional strong bullish push to the upside, which it's starting to already form like a trend range, but this is basically a depletion. You can't really draw a wider channel just yet. Prices traded to the downside. Now we had a nice downtrend working lower, which you'd be expecting nice second entry short at the EMA. We had a break and new extreme, no setup on the way down for us to take. We actually have a decent first entry long, second entry long failure, but you're still above EMA. The bar is really big. This has a late second entry long characteristics, but it's definitely more advanced. And notice once again, you have a little bit of a wedge, a little bit of a congestion. So you definitely don't want to be selling. Why? Because you have a break new low and there's a small support forming again. You can see how suddenly EMA was pointing up and you have a strong bullish spike. And now once you can see a lot of whipsawing up and down, the market cycle is shifting from bullish trend into a trend range. EMA completely flat, a lot of price swings up and down. You can see support is forming. We can't really even go long because we have inside bar here, bearish bar here. It's getting a little bit wedgy, so it's better to be patient here. Prices finally broke to the upside. New high, first entry long, pull back, second entry long. We have a second entry long, micro two-legged pull back down. Great signal bar. It was good enough for a scalp. Multiple points, 4 or 5 points for a scalp, even for the biggest scalp. So this was a decent trade. I tried to take this myself, but didn't get filled. Market corrected with the two-legged pullback, and you can see already what is starting to happen. This low never managed to go all the way down to this support, and the same thing goes for even this low. Once you can see that this downtrend after break never tested its low and never made it to the support, the bullish imbalance was confirmed, and you at this point are hinting that may be possible bigger channel, or at least the bias is more bullish. because the small bullish imbalance is forming. You can see at the end of a trading range, the lows are higher and you're not even making it to the support. You can't really sell high here because we traded up into this trading range and everything is so far so bullish. You would need the failed second entry long reversal pattern, which you never form. You push too far down and you're so far away from EMA. So no really good way for us to enter, no clean high probability setups. If you can take a look at these high probability setups, you know, price action rules are working perfectly here. Everything makes sense. High probability setups are forming. This was all pre-market. And after market opened, you know, a lot of chop and prices are really struggling to pull back and give us a nice high probability setup because we have this massive bullish push up, which you can see EMA once again pointing up. I need to respect even the corrections. You can see I keep drawing the short-term channels. We have a break new low. We have a second entry long. New low for the downtrend, which means bearish momentum played out. This short-term channel needs new high, but more importantly, the overall sentiment is bullish as we establish after this bullish imbalance at the end of a trend range. But notice the high low, notice the horrible bearish tail at the top. Had this bar been fully bullish, you can take high low confirmation setup of the second entry long, because this is what high low is good for. Because you know that the structure is bullish, but the second entry long formed below EMA, and you never know when there's going to be one little push lower since you're below EMA. So if you see something wrong with the second entry long like this, if you see additional push above EMA and EMA holding, confirmation setup high low is going to confirm that the second entry long is okay and you can take high low. But look at the signal bar here. You know, you can't take it. By the time you get a failed second entry short, you're so far from EMA. You can't take it this far from EMA, and you know, nothing's really forming here. It's very hard to find a bigger pattern. Even this channel is not confirmed just yet. So you just have to basically follow the shortened channels. Try not to get trapped and try not to buy too high. We have a break new high. So there's nothing for us to take. Remember, high probability setup needs to form where all the conditions align. You need to have the good context. You need to have the good channel, good pattern. There cannot be congestion. You shouldn't have conflicting beliefs. The pattern needs to form great, and we cannot say that here. You know, we have a second entry long here, but it's below EMA doji. It's just starting to go sideways. And you can see this is a very weak uptrend. What we already mentioned about weak uptrends, you want to be careful buying at the top of the push phase. The correction phase may be longer because weak trends are going to have stronger bearish corrections, deeper. So a lot of two-sided trading. So this is definitely weak form of an uptrend, which the best way how you trade them is you wait for correction and take failed second entry short, which we didn't even get that because once again, downtrend break new extreme. You have a new low, first entry short. You don't get a failed second entry short because it triggered above bearish bar. You cannot take entry above bearish bar, but there was no trigger above this bullish bar, so there is no failed second entry short. And if the failed second entry short is forming sketchy, but your bias is still bullish, you'd be expecting second entry long, but second entry long form as inside bar of this bearish bar without the key entry point other than the EMA. So once again, context is good for second entry long because you pushed above EMA, this uptrend is new high, but the inside bar of this bearish bar makes it sketchy. Then you have high low, but it's just gigantic. You can't really enter. And you can definitely see once again, just like here, EMA was pointing up, EMA was pointing up, and suddenly it's completely flattening, and suddenly it's flattening. A lot of prices swinging up and down, up and down. So two-sided trading, indicating a ranging market with bullish bias. So you're not thinking about selling. All this time, I'm not even thinking about selling. All I'm thinking about is letting the bearish correction play out, letting it be deep enough, and hoping for some nice failed second entry short above EMA. We have a first entry long, second entry long that confirmed the trend line, which is a good sign. What are you expecting? Failed second entry short. New low, first entry short, and we don't get a failed second entry short. So once again, we can't really go long here. And notice, what is this structure representing? Once again, wedge. Just like here, each new bearish push is smaller and smaller. You can see support forming. Here you can see each bullish push is smaller and smaller, and the resistance is forming. And once again, once you see wedge, you have to be careful and you cannot rush setups. You need to let it break out of the wedge because wedge is almost like a congestion. You can see the downtrend working lower, the uptrend working higher. It's getting too wedgy. So there is no setup either way. There's just, you know, no real setup anyway, so we can't really get trapped here. But even if there was a nice setup, you have to be careful. Pay attention to these wedges. Notice how much empty room there is at the top of the trend line. It is basically a trend range, and once it's two wedges, you got to be careful. It is here. You can see you have even wedge here, so be careful about those wedges. Prices are breaking lower. We're once again at the support, and here I'm still expecting prices to go higher. I'm expecting new high for this uptrend because we first broke this channel. Combining with the support, I keep looking for failed second entry shorts. I have a new low, first entry short, pull back, second entry short, but notice how big this bar is. Basically, by the time this bar forms, the scalp was already made. So even though it worked for a scalp, even after that, you definitely cannot risk the bar like this. It's too late. You have micro break new high. You expect new high for the channel because the structure was bullish, but there was just no way for enter. And as market continue working lower, you have to measure the first leg and expect and project the second leg, because something is happening here. The fact that we cannot even make it to the top of the string range is a sign that the market is a little bit too bearish. So quite confusing price action. You can see how range like it is, completely flat EMA, and yet we can't really get a good failed second entry short at the low. So one of those days where you just have to be careful. Downtrend working lower, new low, first entry short, pull back, second entry short, EMA held once, EMA held twice. You expect the second move to get measured leg down. Decent setup. Market created push down. First entry short, second entry short failure, but once again, bearish bar, you can't really take it. And the bias is unclear. At this point, you can't really take the bias. If you're not sure, zoom back and think about in what direction you traded into. Okay, overwhelmingly, we were trending to the upside after the open. So now that I can see that we have somewhat of a two-legged pullback down, I'm still thinking more bullish, especially since we are above EMA, that this channel may get new extreme. Notice bulls attempted to test the new high of this channel. The bearish correction was just deeper. However, I really don't see any setup here. Spike, congestion. This is exactly how spike in a channel likes to happen, how it likes to form. You have one steep tight leg followed by a congestion, which allows you to set the flatter channel. The spike in a channel is a bullish pattern where the first leg is too steep for market to continue. It needs to get the flatter second leg. You can see first leg, second leg almost measured. We overshot it a little bit. Spike in a channel, and notice new high, first entry long, pull back, second entry long, but you can't take it because the signal bar is horrible. It's a doji bar, but notice you shortly after formed double trap right above the EMA, right above the trend line. Visual two-legged pullback down, first leg down, second leg down, double trap, trap all the early sellers and all the early bulls who bought the doji bar with bearish stim, which we can't let go long just yet. And two key entry points. This is a decent high probability setup, other than the signal bar is a little bit more bearish, but the signal bar had a nice bullish stim indicating a lot of buyers are buying at this point. First entry long, second entry long, but once again, inside bar, excuse me, not inside bar, but the signal bar is bearish, so double bar entry is here, but notice how stacked is getting. Break, new extreme for the uptrend. And as you can see, market got congested a lot and basically it's too late. So we can't really take any setup here. Very unusual price action. I started trading somewhere around this area. I didn't manage to take these setups early. And after market opened, it was very hard to take a setup. But it's just one of those days. Price action still works, but sometimes the setup are just not forming as we like. Sometimes it is forming perfectly. It is almost too easy to believe. But sometimes on a day like this, you can see you just have to be patient because everything is just too fast, too cluttered. Nothing is pulling back in a clean form. The signal bars may not be that great, but today was very hectic. A lot of events happening in the world. The banks are collapsing. So the price action was very spooky. You definitely cannot pull the trigger prematurely. But hopefully you had a decent trading day. I don't like rushing through the chart like this. But since we have so many bars and so few setups, I had to make it a little bit shorter. So good luck with your trading.